Hello guys, this is Ray Chen from Millionaire Agent. So today I'm gonna share with you the 4 big secrets to pay zero taxes on your rental properties, and also to expense most of your expenses. So before I start, click my like my video and subscribe to my channel, and click on the bell icon. And I want to disclaim that I'm not a real estate attorney. I'm not an attorney. I'm not a CPA. So if you want to do this, you still need to get a consult a professional CPA or attorney. Okay. So this is just for entertainment purpose. So number one, the biggest way to save money when you invest in real estate is depreciation. Okay. So if you're buying a residential property, you can depreciate over 27.5 years. So let's say if you're, for simple math, let's say if the property is $1 million, so normally you can only depreciate the structure. You cannot depreciate the land. So what depreciation means is that basically over the years, the building, they deteriorate. So you are able to, because the building deteriorates, so you lost the value in the building. So that's why you can depreciate. So for this purpose, we're not gonna differentiate between land or building. We're just gonna say, let's say if you have $1 million to depreciate, and if it's a residential property, you can differentiate over 27.5 years. So that means every year you can depreciate $36,363. Let's say if you're buying a commercial property, whether it be a hotel or income property. By the way, 5 units or more rental income property are considered commercial properties. If it's 4 units or less, multifamily is still considered residential property. Okay, so for commercial properties, you can depreciate $1 million over 39 years. So that means you can depreciate about $20,531 every single year. Okay, so some of you say, what if I only own the property for, let's say, 2 years or 3 years or 5 years? Then how do I take advantage of those remaining depreciation? So if that's the case, what you can do is you can do cost segregation. So basically what cost segregation help you to achieve is that it helps you to accelerate the depreciation. That way you can, offset the income faster. So you can, instead of only able to offset the income, over 27.5 years or 39 years, if you do cost segregation, then you can, accelerate those depreciation. So how do you do a cost segregation? So if you want to do cost segregation, you will look for a company. There are companies out there that does nothing but cost segregation. So basically what they do is they segment different section of the home according to, for example, let's say there's a pavement, there is a lumber, there is a drywall, there is appliances. So each sector of the building, each section of the building, it depreciate over different time frame. So basically what this cost segregation company will do, they will make a report to do the cost segregation for you, so that you can accelerate the depreciation. So it's kind of complicated, if you want to do it, if you want to do cost segregation, obviously you need to consult a professional. There are companies that does, cost segregation. So that's number 2 secret. Number 3 secret to defer paying taxes is 1031 exchange. So a lot of investors are able to take advantage of 1031 exchange so that they don't, pay any taxes at all. So basically you just roll your capital gain into the next property. Okay. So in order to do 1031 exchange, number one, it has to be like for like. So the like for like doesn't mean it has to be the same property. For example, let's say if you sold a retail plaza and you're trying to buy a multifamily, that's okay too. When the IRS says like to like, what they mean is the purpose, not the property type. Let's say if you own let's say if you own a home, single family home, but you didn't live in it, you were renting it out to use it as an income property. Then once you sell that, you can exchange into any property that's also for income purpose. For example, you could buy multifamily, you could buy retail plaza, you could buy self-storage, whatever. As long as the use is the same, okay? So that's number one rule for 1031 exchange. Number two rule is that there is a timeline. Okay, so let's say if you sold your property for $1 million and you want 1031 exchange that $1 million into something else, you have to identify the replacement property within the 45 days of the closing of escrow, within 45 days of the last property was sold. And you have to close the escrow, to close the entire sales cycle within 180 days. So there is a time frame. It is kind of short. So you gotta, when you do want to do the 1031 exchange, you gotta act quickly. Otherwise, if you go over the timeline, then you may not be able to complete the 1031 exchange. Then you might end up pay taxes. And another rule is that to qualify for the 1031 exchange, whatever you exchange into, the total value has to be either the same or more. Let's say if you bought this home for $500,000, and if you sold it for $1 million, if you want to exchange, whatever you buy has to be more than $1 million or exact the same price. Let's say if you do not want to buy a $1 million property, you could buy two properties that adds up to $1 million. Let's say if you buy two properties, each property costs $500,000, and as long as it adds up to be $1 million or more, then you would qualify for 1031 exchange. And another rule for 1031 exchange is that the title has to be similar. Let's say if the previous property is under LLC, so when you exchange to another property, it also needs to be under LLC. Okay, so we just talked about 1031 exchange. Now the next topic we're going to talk about, the fourth secret that's going to help you save a lot of money, save a lot of taxes, is income deduction. So let's say, so last time I actually met I went to see a doctor of mine. So he was asking me, when your CPA report tax for you, do they give you a copy of the tax return? I said, of course. And then he said he never got it. He kept asking the CPA, but the CPA never gave it to him. So he said, then I asked him, how much taxes are you paying every year? He said he's paying $500,000 in taxes every year. Can you believe it? That's just a crazy number, right? Then I told him, I said, hey, instead of you paying so much taxes, what you should have done is that, because right now his office is located in a big building. What you should have done is, since you're already paying all these taxes, instead of paying those taxes, you should take that $500,000 a year. Let's say if you maybe use $1 million, you buy a medical office. Then you put that medical office into an LLC. So every month because the doctor, his practice is one company, and if he buys a medical office, the medical office will be under LLC. That will be another company, but both companies under his personal name. So instead of paying rent to other landowners, he should pay the rent to his LLC, which owns the office that he just bought, and then let's say if his income before was $1 million a year for his medical practice. Now, let's say if he pays $5,000 a month, let's say if he pays $10,000 a month for rent, and for 12 months he pays $120,000 for rent, then he pays to his LLC, then his basis for taxes would lower from $1 million to $880,000. So this way, just by doing this alone, he's gonna save a lot of taxes. So let's say, okay, then you would ask, what if the income he's getting for his LLC? So the income he's getting for his LLC, he can expense many of the income as well. For example, the taxes he pay, the interest he pay, and he can also do depreciation. So he can pretty much, he can pretty much defer all the income, not having to pay any taxes for the $120,000 rent he got from his medical practice. So as you can see, if he do it correctly, he can save so much money instead of paying $500,000 in taxes. Isn't that crazy? Okay, so here's a quick, explanation of the 4 secrets that you can act on to save taxes, to defer taxes, and to not having to pay, Uncle Sam $500,000 in taxes. That's just totally crazy, right? Imagine how much more you can do with the $500,000. Imagine how much real estate property you can buy with that money that you paid to Uncle Sam, right? So I explained this to the doctor. He appreciated me so much. He waived my visiting fee. He didn't charge me. So that's it for today. So this is Ray Chen. Thank you for listening for watching my program. Click my to like my channel, subscribe to my channel, like my video, and click on the bell icon. Okay, until next time.